I think we should be in the final 5 minutes of the opening range. It's final 5 minutes. So 1, 2, 3. So this is the range. Here to here. That's the range. Yeah. So that's the range. And whatever price breaks out is where we're going to enter. Now, what's this blue line? I think this must have been, what was I looking at here? I'm not sure, but price came back to touch this line. That's not important. I want to zoom out for the last 3 to 5 days and let's see the most energetic move. I think it's pretty obvious. It's pretty obvious that it's this last one, move up. That's the most energetic move. 3 days. Today is 30. Okay, today is 31. So 30, 29, 28. Yeah. So this is about it. So in this entire move, I think this green up move. So I would say the market is pretty bullish. So let's put our sign up. If we break down, which is okay, so the range is being extended here. This is not a breakout, by the way, because 15 minutes is not done. We still have 1 minute. Okay, great. So we still have 1 minute. The last candle has not formed, has not closed rather. So I think this is the lowest low for now. Right there. So the candle closes in 30 seconds from here. So what we're going to look at is, so I think higher time frame bias is up. We want to confirm if we get a break to the upside, if we do, or a break to the lower side. I've identified this place as a point of interest. Anytime you see smooth areas just before the market open, price usually likes to come back and tap there. But that's not our model. That's not our trading strategy. It's just my experience. So even if price breaks down, eventually I believe it will come back to tap this place this session. And it may already even be trying to go back there now. So the range is formed. This is the 15-minute range. These 3 candles. 1, 2, 3. That's the range. Let's make this. Oops. Okay. So that 3 candles. So now we're waiting for the breakout. If this breaks lower, I'm going to enter short. And but that would be a B setup because the higher time frame direction is up. So very simple. Let me get my measurement tool. I want to zoom out. Zoom out to have up to 1 a.m. 1 a.m. thereabout on the chart and have an idea. So this is what I'm looking at on my position sizing. Now I'm going to I'm checking my phone now for my MT5 to know what my position sizing would be if I go with that trade. This is just by way of explanation. Okay, let me do it like I did yesterday. very quickly. So I'll join with my phone and quickly share. I'll quickly share my screen.
Recording in progress.
Okay. Yeah, screen. So let's assume you were on MT5 this way. Assume you had $100 you wanted to in your account. You have $100 in your account, and you want to risk, say, 2% per trade. So that means you want $2 on this account. I'm going to use my eye to gauge on the trading view where my stop loss is, or how many points. I can use the number of points to gauge it. 46 points is what I see. So 46 points is somewhere here. Okay. And immediately I can see that is showing me 3.65 cents on the left. You can see 3.65 dollars. But I only want to risk $2. So I change this 0.8. That's the lot size. I change to 0.7. Click out. It should update. So I need to adjust that until it shows me $2. So that's how you basically know your position size. You see, something like that. So I know that 0.45 is what I want to use on this particular trade. If my account balance was $100 and I want to raise 2%. If I wanted to raise 1%, then I'm going to reduce that to 0.2, 0.25, 0.23. You see, 0.22. Yeah, 0.22 will be my lot size, just based on that risk to reward. And my TP would now come down to 1-to-1, which would be the same $1. That would be my trade. So I see that it's much easier to do this on MT5. On MT4, it's hard to, you don't even have this option to do this kind of thing, because I'm still using, anyway, it's not a buy limit. I'm going to enter at the market. I'm only using this thing to know my position size. Are you getting it? Once I've known my position size is 0.22, that's all I need to know. When I want to buy, I will just come and click buy, or if I want to sell, I'll click sell at market. So I'm not using this. So I've known that it's 0.22 that I want to use. And the way I knew that is by checking the session, the TradingView chart. So let me go back to my system. Okay. So as I said, you see the market is, well, it's doing like it wants to reverse. Let's not say it's reversing. It's doing like it wants to reverse. So this was the tool I used to know. This automatic, and I've explained to you how I always do it. So the range is finished. We have a sweep of the low here, and I don't know where we are going to open or to break out, but we are going to wait. We're going to wait. I'll just do a little bit of check. I think London session was one. Yeah, we are below London. This is Asia was 6 p.m. Let me check some things. Okay. Wow. So there's a high chance that we actually go back up from here. Quite a high chance. Quite a high chance. But you know why this trade is really forgiving? Sometimes, even when you when you think direction is up and the market is going down, what you're looking for is just a little bit of a push. Like this is just 46 points. Just so even if yes, it's a fake out, that fake out will still give you your profit. Okay, so well, my intuition tells me that we are going to go back up. I've already said this blue line is I think market will come back to this point, and this may be an initial fake out, but that doesn't concern our strategy. Oga Sheriff, are you trading with us? I know you have your own. Yeah, you are muted. I can't hear you.
I'm here with you, sir. I'm here. I'm here with you, sir. I'm learning.
You are learning,
Yes, sir. I'm watching from yours.
but is it clear? Is it clear so far? Is it making sense?
Actually, I've not been stable. I was listening to the video. So
Okay. Yeah,
I
I'll do
think that
another
we wait
strategy
for
video.
15 minutes candle. 15 minutes candle.
Yeah. The
Hello.
15-minute candle has closed. The first 15
Tuesday.
minutes,
Okay.
yes, from 9:30 to 9:45. That's the 15 minutes. That's the three candles we wait for. So
Okay.
after that, we
So
mark
I'm
the
with
high
you.
and the low. We mark the high of those three
Low.
candles and the low. We drag it. So wherever price breaks,
Wherever it breaks out, you follow
yes,
it.
wherever it breaks out, that's where we enter. And we're just looking for one-to-one. We're just looking for one-to-one, like it's a almost guaranteed. It's like 80%. Or let's just say 75% guaranteed.
From the
So see that
direction of
this,
the breakout.
yes, I know it's guaranteed that you win when you target this kind of risk to reward, that the way I'm doing it, you know. When
Yes,
you
sir.
do risk to reward like this, your profit is basically based on the risk. So if you risk $2 and you are doing one-to-one, that means your profit is $1. Sorry, your profit is $2. If you risk $5, your profit is $5. That's what one-to-one risk to reward means. You get. So based on this
Yes, sir.
range, the way TradingView gives us this thing, the way I explained it to you, um, almost guaranteed. Like that's why I said that if this thing breaks out to the low side, let's assume it breaks out and close here. If it breaks out and close here, it's almost guaranteed that the market will still come down to this point before reversing. So even if you are wrong on direction, we still win most of the time, and that's all we need. It's just our small one-to-one for the day. So that's why I call this a bread and butter setup.
All right, sir.
So yeah, so
I'm with you.
we're back in the range. We're back in the range. Let's see what direction we want to go. So today I will not be trailing. I won't be trailing my trade because I actually have a meeting. I'm on site. I'm expecting some inspectors from Lagos State for our building project. So I was stylishly hoping that market will just give me quick move and we'll get out. But if you go and check, I think on Tuesday, was it Tuesday or maybe Tuesday? That was like the fastest. The whole trade was done in 1 minute. Like after the breakout, like this candle just broke out, and in 1 minute, as we entered, boom, less than it was like 10 seconds. We hit TP, and that was all for the day. So busy people now, like anti-informer now, very busy people. Once they just enter market, collect their money for the day, just close their market and move on till tomorrow. So that's the kind of thing that I'm trying to give you. Every other strategy you do will just be like icing on the cake. But this one, you know that you can grow your account every day.
But, sir,
Yes?
hi, sir. Yeah. I can see that in this one, you are applying the stop loss, sir. Can't we apply DCA with?
No, me, I apply DCA. I'm only using the stop loss to know my risk, my position size.
Okay.
I'm using my stop loss to know my position
Okay.
size. Yes. But again, we grade the trades. We grade it. There's A setup, there's a B setup, there's a C setup based on higher time frame. If the breakout is in the direction of higher time frame, then I'll DCA. But if it's not in the direction of higher time frame, that means that's a less likely. I will not bet DCA on it because the market may just reverse for the entire day and then you'll be in trouble. You understand? So when I'm sure that okay, we are going up, even if it goes against me, I know that I can DCA. So that DCA is what I call dynamic money management in the strategy, in this
Okay.
particular strategy. Yeah, so it's part of it. That even if the thing goes against you, you can actually still come out in profit. Yeah.
Sir.
This ATMA, this
So
anyway, we'll look at this
you,
ATMA later. Let me not confuse the people that want to learn. You're advanced student.
I've let you know. I'm with my boss, sir.
You're advanced student. Okay, we are still within
Yes,
the
sir.
range. We are still within the range. So we are basically looking for a breakout between either lower than here or above here. That's what we're looking for. I don't know how long before. Let me see. This is 10. I think yesterday too. Yesterday kept us for like before we got the breakout. We got the breakout yesterday at 10:20. So that was like 50 minutes into the session. That was when we got the breakout. And you can see that it actually played out. So this was yesterday's trade. When the thing broke out here, immediately you put this one would have already determined this already. I've shown you how to determine this. I've determined your target, your price, but you don't know where you enter. It's where you enter that's the challenge. But wherever it enters, we know that we are going to target 14 points. And we're looking for 1%. If whatever you want to risk, that's what you will gain. If you risk 2% in terms of your stop loss here, you will make 2%. But the reason I didn't want to DCA yesterday was because it was a B. No, I will still DCA a B setup. I will just not go with a full position size. So yesterday, my higher time frame analysis was neutral. Can you see how the market is neutral? It's just ranging. If I zoom out, it's just ranging. So that was my analysis, and I was like, okay, I don't really have a higher time frame direction. I don't know whether market wants to go up or down. But wherever the thing breaks, I will enter. So for that reason, if I was normally going to risk 2% on the trade, I will now risk 1%. That's the only thing the scoring does. If it's a B setup, I will not risk my highest risk on the trade. But it will still play out. That's what I was telling you, Sheriff. Even if the market wants to go against you, you will still get your TP. You understand? You will still
Okay, sir.
that our position size thing. Even if the market wants to, because look at it, it was actually at the end of the day, the market went down like crazy. See, the market went down and now went up. So it was still a rangy day. It was just an undecided kind of day. But the only thing that it affects in our strategy is the how much risk we put on the table. So some of us who are a bit more aggressive, like me now, I'm trying to be a bit careful with what I tell you guys. I don't want people to be reckless with their trading. But because of the high win rate I have on this strategy, I can actually raise 5% comfortably per trade. I can raise 5%. And I know that that's if I win 5% every day, then that's in a week, it's 25%. Let's even say I lose one day. That's like 20% a week or 15% for the week. If you reach 2%, you make 2%. But that's
Sir,
if you are not trailing. Yeah.
sir.
Yes, I'm hearing you.
Hi, sir.
I can hear you, bro.
Please, sir, can you kindly throw more light on that?
On what? I can't hear you, Sheriff. I think Sheriff's network is bad. But the rest of us can see. Mr. Momo is on the call. Good afternoon. Once you put your position size, and I'll show you how to do that, you just zoom out with TradingView now. There are other ways of determining your position size. Some people, once the candle breaks up and closes, they will put their entry here. They will put their stop below the candle, the breakout candle. They will put the stop there, and then they will still target 1-to-1 like this. So you see that if you did this on this day, well, maybe you will still have been profitable if you dollar cost average. If you use a hard stop loss, it will stop you out here. But for us, we don't use a hard stop loss when it's a B setup. We still dollar cost average. So if you entered the first trade here, and
Network took me out.
yeah, I know. So I'm explaining something.
Yes, sir.
So I'm trying to show them that for yesterday's trade, even if the trade went against you, right? Yeah, this was yesterday. So we enter here, even if you went with the traditional, there are different ways people manage this. But me, I've just seen that this dynamic way of using TradingView's default stuff, order placement, gives you you get stopped out less or the least. So they will put their stop below the recent candle that broke the range, and then they'll target 1-to-1. If you did that, what would happen is when the price came back and closed below, like you won't do anything all this, even if you are in drawdown, you won't do anything. But if the price closes below this 21 EMA line, like right here, that's where you would have added a second position. And by the time you add a second position, as I always explain to us, it means that your average entry for the two trades is now here. This is your first entry. This is your second entry. So your average entry is now here. So what that means is when price came back here, you already break even. All this way, you already break even. You can actually exit your trade which however you want, or you could follow it and trail. You could follow it and trail, and maybe you would have still hit your final TP, your original TP point right here. So it would have been a win for you, however, if you did that yesterday. But I don't use that sort of money management for my own. So yeah, so Kazim, you were saying something.
Hey. Hello, sir.
Yes, sir.
Thank you. I said I need to kindly explain difference between A setup, B setup, and C setup. How to
Okay.
differentiate them.
Okay. So that's kind of like the subjective part of this analysis. But let me show you one more time. While it looks like we're trying to go back up here. So there are three things we look at. One, higher time frame. I'm just giving you the principle
Okay.
now. Higher time frame. We want to know the direction on the higher time frame. One way to actually do this is actually go to the higher time frame, maybe 4 hour, and check for yourself. What direction does it look like we are in? Very clearly, we are in an up direction on a higher time frame. Can you see? Whichever way you want to look at it, whether
Yes,
it's
sir.
using market structure, whether it's using fair value gap, whichever way you want to look at it, this looks like it's a retracement, and then we are going back up. But it's very clear here. Another way people use to determine, so if we did this, we know that our higher time frame is up. The other way that I am teaching you guys, for those that may not really understand market structure and all those things, is that on your chart, you can see the date. Today is 31st. You zoom out so that your chart can contain like 3 days. And you can even do this on your MT5 on your phone too. You can zoom out. So today is 31st. I want to see 30. I want to see 29. I want to see 28. So you can zoom out to 3 to 5 days. Somewhere around 3 to 5 days. We just want to have a little bit of context. And then we are looking for the most energetic move. Is it up or down? If you look at this is going down, but it's just sloping gently. This is sloping up gently. This is sloping down a bit aggressive. But I want the most energetic move, and that is this one here. So very easy at a glance. If I ask even a beginner, what direction do you think we're going overall? It looks also, this is what we pick. So okay, higher time frame is up. Now it doesn't matter whether you are even right or wrong, because the only thing our analysis affects is the risk we put on the trade. So I've already identified that the higher time frame is up just by this. The second thing we now check is at the point of breakout. At the point of breakout, I want to see if we are above the 21 EMA. So 21 EMA is more like a short-term time frame analysis or short-term directional analysis. Right now it's showing us red. And if you don't have this red and green thing, I just use the colored EMA. Even the normal one is fine. You can use your eyes to see that it's going down. Right? So if higher time frame is telling us that we are going up, and let's assume we break out lower now. Let's assume we break out lower. Short-term trend is low. Already, that's not an A setup. An A setup will mean that higher time frame is up. The moving average is pointing up. And then we have a breakout above. This will be an A setup. In this kind of, if I have this kind of a scenario, I will put on my maximum risk based on my plan. And for me, that would be 5%. For me, for you, that can be 1%. So I can grade my position size. You need to have 3. Either you're using 2% for A setup, 1% for B setup, and 0.5 for C setup. Me, I can use 5% for A, 2%, 3% for B, and 1% for C. Why do I have that kind of confidence to do 5% on a trade? It's because I've back tested this for many trades. I've seen the edge that is about 80% win rate. So even if I lose one trade, the next trade will very likely be a win. So I'm not really bothered. But you will not have that confidence until you've back tested this or you have forward tested for a long time. You see, so this is an A setup. Up, higher time frame up, short term up, and breakout up. What if I have higher time frame up, lower time, short term down? Already this cannot be A. Whichever combination it gives me, because I already have these two are disagreeing. So already that's a B for me. But if I have this and this price now goes up, okay, for me, if higher time frame is up and the indicator is pointing down and we get this up, for me that's a C setup. Or that's a B setup for me, because higher time frame is up and higher time frame usually wins most of the time. Even if the trade goes against you, I can see dollar cost average and eventually will come back up. Eventually. If I have higher time frame up and the EMA is pointing down at the point of breakout, and then the breakout is also down, this will be a C setup for me. even though and it doesn't mean that the trade will not win. The trade will still win, but I will use less. You know why? I will use my least position on this one because the higher time frame is up. I don't know whether this is the end of the retracement. Let's say it was going up, it came down, and is now going back up. What if I'm trying to dollar cost average, but the higher time frame is telling me up, and I'm now doing DCA to go down, DCA to go down, DCA to go down? I'll kill myself. So for me, this is a C setup. It doesn't mean it will not win, but I'd rather risk 1%. If it's a B setup, I'm more confident in a higher time frame that even if it goes against me, I can DCA. Now, how do we DCA? If we close, let's say we have a trade that breaks to the low side, and then the price now comes back and closes above the 21 EMA. At the close of that candle, that's where I will enter. I will enter a DCA trade. You see. So now, because let's assume I was doing an A setup now. I've risked 5% of my account on that trade, and it now went against me. And I want to DCA. Do you know that I'm adding to my risk? So these are the things I will know in my head already that okay, if this happens, maximum I will add here is maybe 2%. So that means I'm now 7% risk. So you need to know your maximum risk that you want to put on it in a trading session or trading sequence. Since you guys understand trading sequence, you will need to know that. Okay. But eventually we broke to the downside, and even though I did not like the way this candle closed, but that was just like analysis paralysis from me being in the market, my experience about long term. But the strategy says that once price closes below the opening range, you enter a short, and if it closes above, you enter a long. So in this particular instance, this was a B setup because my overall outlook was bullish, and but the short term was bearish, and our breakout was bearish. So this was a B setup for me. Okay, and even though I did not take this trade, it was still a win for the strategy. All right, so I'm basically documenting every day, every trading day of July. I'm forward testing this so you guys can see how powerful this strategy actually is. And this gave us our 1-to-1 in about 10 minutes or less than 10 minutes, and eventually collapsed downwards. All right, so but this would have been okay for us based on the strategy, or maybe you may have trailed up to somewhere here and stopped out somewhere here, but I'm just assuming you took your 1% for the day, and then that would have been all. So if we are to go and check our log, our forward testing log, 31st of July, that was another win. So we've had 4 wins this week, no loss yet, and the entire July, which is about 23 trading days, we've only had 2 losses, as you can see. And that was even because I was doing dollar cost average, but also the dynamic money management is the reason why we did not lose a lot of trades. All the 0.7, 0.6 were dynamic money management, where we DCA into when the price goes against us. All right, so overall we are up 17% for the month of July using this strategy. And the reason I'm teaching you guys is so that you can have something that pays you every day, and you can grow your account without even thinking. Even if you're a beginner, in about 1 or 2 days, this is one of the most simplest strategies that exist, really. And most days we are done in 30 minutes. Yesterday was a bit longer, about 1 hour 20 minutes for the entire no, let's say from the breakout was it was actually 1 hour and 5 minutes, from the end of the opening range at 9:45 all the way to when the trade closed at 10:50. So that's 1 hour 5 minutes yesterday. But most days, in fact, on Tuesday we had our fastest day. Tuesday was everything was done in 1 minute. If you remember, I think I have that video on my channel. Yeah, that was Tuesday. I think this was 9:30 here. So this was okay. This was the opening range, this blue line, and once price closed below this blue line, at this point we entered immediately here, and in 1 minute, literally 1 minute, price went down and hit our TP. So sometimes you can be out in 1 minute, sometimes on average we say 20 to 30 minutes, and some other times it goes as much as an hour. But the point is, every day you can come in and just take your 1% for the day and go about your daily business, and keep growing your account that way. That's my goal for teaching you this strategy, is so that you can have something that consistently builds your account. If you grow your account by 10 to 15% per month, you will be financially free in 3 to 5 years if you are consistent, and that's the plan. So we're going to have another session today by 2:30. Likely that will be a win. We've had no losses this week up till now, so let's see how today will go, and then we'll do a recap. So see you. If you want to learn more about this strategy, you can watch my strategy video. It's about 30 minutes. I'll link to it in the description, and you can also find the links to join my Discord group where we talk about this. We trade together. If you can see, we actually I was actually posting updates even when I went out. When my Zoom went off, I kept posting the updates yesterday. Yeah, so this is where I was saying I didn't like the candle. Yeah, I didn't like the candle, but then the strategy still actually won for the day. All right, okay, so I'll see you guys inside of the Discord and in the next live session.